What's up, traders? In today's video, I will be performing a trade recap on this beautiful counter trend buy opportunity that I managed to get involved in on Euro USD this past week. So stay tuned. Now, as always, we're going to be using the bar replay tool to track price action back to the start of my particular trading session. And I'm just going to be giving you guys a little bit of a breakdown as to how I managed to spot this particular trading opportunity. All right. In the interest of time, I'm going to be keeping all of my markups on the chart. Now, the actual position that I managed to get involved in was this second position in here. I was looking to get involved in this particular position here. However, as you're going to be seeing in a minute, I did not get involved in this particular position because of the fact that we had some high news that was being released at around about this time. All right. So what we're going to do is we're going to bring on that bar replay tool, and I'm going to bring price action back to the start of Thursday, the 16th of March. And we're going to be bringing price action back to around about the open of the London session. All right. And what I want to do is I'm going to drop all the way out to the daily time frame, and I just want to talk you guys through very quickly how I managed to spot this particular trading opportunity. All right, so when we're looking at it from a daily point of view, essentially price action is currently trading within this larger bullish daily range. We obviously had this bullish break of structure to the upside, and after we had a very nice pullback in price that came in to mitigate this daily demand zone, we were obviously anticipating price action to now push up to potentially take that daily week high. All right. Now, what you'll notice is after price action came in to mitigate this daily demand zone in here, we never quite got the strong bullish rally out of this particular zone to continue with that underlying trend. One of the main reasons for this is because we had this supply chain that formed in here that was kind of keeping price action contained within this consolidation phase. Now, at the start of this particular week, the market gapped up quite aggressively, and we managed to close above these highs, which then gave us the indication that price action was now potentially ready to continue with that underlying trend. However, once that unexpected news dropped of Credit Suisse and the fears that what happened to SVB might be happening to Credit Suisse as well, we had this massive drop in price action. Wednesday was a very bearish day on the euro, but essentially what happened is this bearish day pushed price action back in to mitigate this daily demand zone that formed as price action was trading up. All right, now going into my particular trading session here on Thursday, I had seen that price action came in to mitigate this daily demand zone, and it had held really well. My anticipation was now for price action to potentially continue with that underlying trend, potentially to target that daily week high. However, I wanted to see price action trade up towards at least this daily supply zone, because I knew in order for price action to continue higher to potentially target that daily week high, we first needed to see this particular daily supply zone fail. So my daily direction was for that particular day, I was anticipating price action to trade bullish up towards at least this particular daily supply. All right, so my daily bias was bullish. Now, if we drop down to that 4-hour chart, what you'll notice is that huge drop in price. All right, after that unexpected news event on Wednesday, that huge drop in price essentially switched the 4-hour chart, and it's essentially switched 4-hour structure from this bullish price action, all right, towards very sharp bearishness. And what this did is it essentially created a new bearish 4-hour range in here. So this was my 4-hour strong high because I had my 4-hour break of structure in here. As you can see, my previous 4-hour strong low was in here, and my previous 4-hour weak high was in here. While price action did mitigate a well-priced 4-hour demand down here, and while it did give us that bullish continuation in terms of this particular range, it failed to continue. All right, price action dropped all the way. It violated my previous 4-hour strong low, it violated this particular 4-hour demand zone, and it then created this 4-hour bearish range, right? So because of the fact that we were now in this bearish range, my anticipation was for price action to trade out of my discounted pricing into my premium pricing before potentially continuing with that underlying trend, all right, for the 4-hour chart. So that means that my 4-hour bias was also bullish, all right? Even though it was just a pullback, my 4-hour bias was also bullish. And I knew that as long as we are still trading within discounted pricing of that 4-hour range, I could look for potential counter trend setups. So essentially, I could look for price action to pull back, mitigate something in here, and potentially continue with that pullback, all right? So my 4-hour was pointing bullish as well, even though it was just a pullback. And then once we drop down to the 15-minute chart, this is where I now found my particular trading opportunity. So this is, again, Thursday, the 16th of March, all right? The London session has just opened. And as we can see that the Asian session has now closed, and it has given us a very clearly defined Asian high, and it has given us a very clearly defined Asian low. Now, straight off the bat, because I am anticipating this bullish pullback on that 4-hour chart, my mindset is purely to look for potential 15-minute demand zones where I can get involved in that pullback. So what I mean by that is, as price action is pulling back, all right, on that 4-hour time frame, I am looking for 15-minute demand zones where price action could pull back into, mitigate, and continue with that 4-hour pullback. By the way, if we look at the 15-minute range very quickly, you'll notice that the 15-minute range is also currently pointing bearish. You can see that we've had our 15-minute breakout structure in here, which means that we now have this particular large bearish range on the 15-minute chart. And what does that mean? As price action is pulling back, right, after we created this particular low, as price action is pulling back towards at least the equilibrium or premium pricing, we can look for potential counter trend buy opportunities in here, right? And that's what we saw form with this particular 15-minute demand zone. Really, really nice area. After we get the change of character, which confirms this new 15-minute lower low, we get this secondary break of structure from an internal point of view that then leads to the formation of this 15-minute demand zone. So at the start of my particular trading day, I noticed that we have Asian liquidity at the top here. We have Asian liquidity at the bottom. We have now this 15-minute demand zone. So straight off the bat, I am anticipating from the London session, I'm anticipating price action to either sweep this before rolling back over to mitigate this. And from this particular area, I'm looking to trade long, okay? Now, what am I doing for targets? So at this particular point, as the London session opens, I go ahead and I place my buy limit orders on this particular 15-minute demand zone because I have already seen that all of my criteria has been met here. I have the directional bias from my higher time frame, and in terms of my entry criteria for trading a zone directly, I have that imbalance, I have that liquidity rather, and I have that imbalance, and I have a zone that is in line with that underlying direction that I'm trying to trade within. So then I go ahead and I place my limit order in here. However, on this particular day, I know that the European Central Bank is going to be releasing its interest rate decision. So as I'm going into this particular day and as I am placing this particular limit order, I am telling myself that if I am not triggered into the trade before the news event takes place, I'm going to remove that particular order. I'm going to wait for the news event to take place, and only after the news event takes place will I look to get involved again. All right. So if we now just allow price action to play out, we can see that at the open of the London session, price action goes ahead and it takes that Asian session high liquidity. Okay. After that initial sweep of Asian session high liquidity, we are now poised to see price action pull back to target this particular liquidity and potentially mitigate this 15-minute demand zone. All right. So if we continue playing price action forward, we can see the price action is now pulling back, okay? But then we have a period where price action slows down ever so slightly as we approach the open of the New York session. So as we continue playing price action forward, we see that we don't have that much high volume candles forming here on the 15-minute chart. I am still keeping a close eye on it. And then it is around about this point here, roughly an hour or so before the open of the New York session, where I decided to remove this particular order from the market. And the reason I did this is because I did not want to get into a situation where the open of the New York session combined with that high impact news release of the ECB coming in, giving me a large sweep of liquidity down here before potentially continuing in my direction. So I was now comfortable to wait for price action to play out after that particular news event before looking to get involved. And as you can see, this particular candle represents that New York open volume stepping into the market. All right. At this particular point, we're still safe. We still have that liquidity that sits down here, and we still have that imbalance. And if we continue playing price action forward here, after that New York open, we see that this particular candle in here is where we had that ECB interest rate decision. Now, on this particular occasion, you can see that price action pulls in, mitigates the zone almost perfectly, taps the initial trading idea in, right? So on this particular initial trading idea, we would have gotten tapped in quite comfortably, and price action continues, right? So obviously at this point, I have now realized that I'm not going to be getting involved at this particular point because the move has already taken place. So this is where now my mindset shifts and I start thinking to myself that first and foremost, we are still, if we zoom out very quickly, we are still anticipating price action to pull back towards premium pricing. In terms of my take profit placement on this initial idea, I was only looking to trade up towards this 15-minute supply area purely because this 15-minute supply sits within premium pricing of the current bearish 15-minute range. And that means once price action mitigates this particular supply area, there's a good chance that we could see some bearish continuation here on the 15-minute chart. So despite the fact that we had this large impact news event, right, and despite the fact that we now missed out on this particular trading opportunity, we still have our directional bias and we can still look to see potential trading opportunities. Now, this is where that experience comes in, and that repetition in the market will help you find this second opportunity, right? So if we zoom price action in ever so slightly, what you'll notice here is after price action swept the Asian session high, we essentially had this bearish price action in here. So from this particular point to this particular point, we would have had bearish price action on that lower time frame, right? On that internal structure point of view. So with that being said, it would stand to reason that after price action mitigates this particular demand zone, we would like to then see bullish continuation. So in order for us to see that bullish continuation, my internal structure in here will need to switch from this bearish price action to this bullish price action, all right? And in order for us to see that potential shift in structure, we would like to see a change of character. So if I now drop down to the 3-minute chart, and if we just look at what price action has done here, after we have seen this particular mitigation of the 15-minute, we essentially see price action printing a valid change of character in here, purely because we've got price action doing something like this. We've got this bearish price action here. So price action is putting in these lower lows, price action is putting in these lower highs. And then we have a break of structure to the downside, which takes place here, immediately followed by a break of structure to the upside, which takes place in here. So with price action doing this, we have now seen a change of character here on the 3-minute chart. So what this then tells us is that that internal structure has now switched from bearish to bullish after this particular 15-minute mitigation. So now what I like to do is, after I see that change of character, I like to wait for a second break of structure, all right? Because this is when I now look to execute on my confirmation entry model, okay? So if we now allow price action to play forward here on the 3-minute chart, so remember at this particular point, our initial trading opportunity, we were not able to get involved in, okay? So we're now waiting for a potential second opportunity. Price action does print a valid 3-hour demand zone in here, all right? But as you'll see in a minute, this just gives extra confirmation to the zone that I actually trade from. So if we allow price action to play forward a little bit more, we now have, okay, this particular second break of structure that takes place. As soon as I see this second break of structure take place, I am now poised to trade the confirmation entry model. And it simply becomes a case of, where does this second break of structure originate from? Well, we've got a valid 3-minute demand zone that forms in here. We can see that we have a nice bullish engulfing candle. It does lead to that break of structure, both from a 3-minute point of view and from this internal 1-minute point of view. We have just a little bit of imbalance in there. So as soon as I see this second break of structure, I go ahead, and if I zoom out ever so slightly, I go ahead and I place another buy limit order in here. All right, so my underlying bias is still bullish. I'm looking to trade that 15-minute pullback and the 4-hour pullback. I have already identified that daily supply zone that I'm anticipating price action to trade in towards. And now, having missed this initial opportunity, which would have been a successful tap into a trade, but because of my trading plan, I do not like to trade high impact news events. I am now looking to trade a second opportunity, all right? And this is not forced. I'm not trying to chase the market because I've now seen this bullishness. I am using a defined rules-based trading plan to find this opportunity, okay? So if we allow price action to play forward now on the 3-minute chart, we have already placed our buy limit orders in here. We can see that liquidity building down there, all right? So we allow price action to play forward. We can see that we have a bit of sideways movement. Price action then comes down. We mitigate the 3-minute demand zone. We get triggered into the trade at this particular point in time. And from here now, it's all about managing the trade. So we have now been triggered into the trade. I had a 15 pip stop on this particular trade. So at this particular point now, we get triggered into the trade, all right? Now, this is going into the end of the particular trading day on Thursday, the 16th of March, all right? So I have now committed to holding this trade overnight purely because the context of this particular setup, I am very comfortable with, and I'm happy to leave this overnight. And if we now just allow price action to play forward, we can see that we get a very nice tap into our particular trade. We then have price action going into spread hours at the end of the New York session, where price action kind of just starts trickling sideways with not a lot of volume. I'm obviously now asleep. I am not at my charts at this particular point in time. We then have the open of the Asian session in here. Still, I'm not at my charts. I'm allowing price action to play forward. I normally get to my charts roughly 30 minutes to an hour before the end of the Asian session. So this was roughly around about the time that I got to my charts. I am now approaching my overall take profit target. As you can see, we still have a little bit of real estate up towards this particular 15-minute supply zone. So again, if we drop back out to that 4-hour chart and we just reassess what price action is doing, we can see that at the start of this particular day, which would have been now Friday, the 17th of March, we can see that price action is now traded well into our premium pricing. We've obviously got a large amount of imbalance in here that can be filled. We have this extreme, and then we obviously have that daily zone that we can still anticipate price action to trade towards. So because my 4-hour is still showing some strong bullish intent, I am comfortable to allow this particular trade to play out. Okay, obviously with the open of the London session coming, I would like to see price action go ahead and give us that volume that kicks in normally at the open of London, like it did in here, just to drive price action towards that particular 15-minute. And if we play price action forward, essentially that is what happens. We have the London open in and around here, and we see price action going ahead, not only to mitigate this particular 15-minute supply area, but also to smash our take profit. So the full position on this particular trade was reached, a total of 4.58 R that I managed to secure. Now, had I managed to get involved in the initial trade idea or the initial trade opportunity, that had a trade potential of 7.3 R. But again, because of the fact that I don't like to trade around news events, I am not bothered by the fact that I missed out on this particular opportunity. I am much happier with the fact that I managed to follow my rules and I managed to stay calm to find another potential trading opportunity. All right. But essentially, that's how I managed to use that higher time frame narrative, how I managed to identify that higher time frame and mid time frame directional bias to find a potential trading opportunity. And it is quite simply the same thing over and over again. Find your directional bias, decide whether you're trading counter trend or pro trend, and simply trade zones that are in line with that underlying bias. All right. If you guys enjoyed this video, please make sure that you give it a like, subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.